Real estate investing, and by that I mean buy and hold real estate investing, can actually make you money in 6 different ways all at the same time. That's right, I said it. I know this to be the case because I actually do real estate investing myself, and I own 9 buy and hold real estate investment properties here in the ever so expensive Northern California Bay Area. And each of the properties I own are generating wealth for me in 6 different ways.
But Jay, bro, it doesn't matter because real estate prices are gonna fall.
Now I know a lot of people are worried because, let's face it, the world's been crazy. And the Federal Reserve has been making money out of thin air faster than Andrei Jikh. How does he do that anyway? Even with all the craziness, I'm going to explain to you why I think buy and hold real estate investing is the best move you can make right now for your money. We're going to talk about that, and it happens right now. Hey you guys, I'm Jay, and here we talk about real estate investing.
Subscribe.
That's why I'm so excited to share with you guys today exactly how powerful real estate investing can really be. If you think about it, each buy and hold real estate property is like its own little money generating factory, growing your wealth in 6 different ways. I just want to jump right into this. Let's talk about the first way, which is cash flow. For me, cash flow is super exciting. It's one of the things I love most about real estate investing. You see, cash flow is the reason why I don't really care if my properties go down in value, because I'm not going to sell my properties anyway. In its simplest form, cash flow is just the leftover money that goes into your bank account each month after all expenses are paid. Assuming you have a mortgage, and you should have a mortgage, when you rent your property out, you're going to collect rents, but you're also going to have to pay something. Each month you'll be paying principal, interest, taxes, and insurance. That's called PITI. You'll also need to consider repairs and vacancy, so you should put some aside for that. You add all that up and subtract it from that rental amount that you collected, and that little leftover slice, that's your cash flow. It's basically just your money to keep, do whatever you want with. I recommend putting it into a high yield savings account so you can start saving up for the down payment on your next real estate investment property. But beyond just a simple definition, cash flow is really powerful stuff when you're trying to build wealth. For me, I try to set my personal budget to not exceed my cash flow from my rental property. That way I know no matter what happens, I'll have enough money each month for my living expenses. Cash flow is also something that can keep going basically perpetually. As long as you properly maintain the real estate property, you should be able to continue getting cash flow for essentially as long as you want. I think it's a fantastic retirement plan, a way that you can have monthly income for the rest of your life. Now, if you're thinking, oh yeah, lots of things give you cash flow. Hang on, wait a second, check it out. Check it out! With just 4 real estate investment properties. Here in Northern California, it's perfectly reasonable to expect $2,500 a month cash flow from each property after the property is paid off in 30 years. That's $10,000 a month. I guess this depends on your timeline horizon and when exactly you're planning to retire, but hear me out. Dividend investors commonly cite the 4% rule. This is a strategy where they have enough invested in the market where they can safely extract 4% each month to cover all their living expenses. In order to have the same experience where you get $10,000 a month from the market, you'd have to have $3 million invested in the stock market. So what's the difference? You'd probably have to have $3 million worth of real estate also, right? Here's the difference. Your tenants are buying that real estate for you. You merely have to hustle hard enough to get it financed, to get it under your name, and not lose it for 30 years. Keep it rented. That's the power of cash flow through buy and hold real estate investing. Boom! Can someone get me a mic to drop? Oh, what's that? Mics are expensive? Oh, okay, sorry. Let's move on to number 2. The number 2 way that buy and hold real estate investing can help you generate wealth is through appreciation. Basically, appreciation is the asset that you own goes up in value. Appreciation is not unique to real estate. There are lots of things that appreciate, but there's something very unique about buy and hold real estate when it comes to appreciation, and that is forced appreciation. That's right. See, if you buy a share of Tesla, you can't really do much to affect the share price. However, with real estate, if you want it to go up in value, you have the opportunity to just show up, make some smart, intelligent repairs at a low cost, and increase the value of the home by, in some cases, a lot. But even if you don't force appreciation, long-term historical trends would suggest that over time, real estate tends to go up in value. Check out this chart that shows 30 years of home prices with 1990 as the index. you can see the long-term trend is that prices go up. You can see the 2008 bubble, and then you can see the crash. But if we were to draw a trend line over this, we would see an upward moving trend. And you see the same thing if you break it out by all the individual markets. So if you're into real estate investing for the long term, appreciation should work out in your favor and you're probably gonna be all right. Now there might be a few of you thinking, yeah, well, appreciation doesn't put money into your pocket. The point is that it's adding to your net worth. Whatever you do, do not underestimate the power of net worth. You can leverage your net worth to generate cash flow. Let me ask you this, who's gonna have an easier time coming up with an additional $2,000 a month cash flow? Somebody who has zero net worth or somebody who already has $1 million net worth? I'll just leave it at that. Number 3, the next way that real estate investing generates wealth for you is through something called principal paydown. You borrowed a certain amount of money from the bank in order to purchase the property. And each month when you make your mortgage payment, part of your mortgage payment is paying back the money you originally borrowed. That's principal paydown. Little by little, you're owning more and more of the property and the bank is owning less and less. So if you think about it, in a very real way, your tenants are buying you a house. When you put it that way, it makes you want to be nice to your tenants, right? Another thing that's powerful about principal paydown is the fact that with each mortgage payment, you're paying a little bit more principal than the last mortgage payment. Let me explain what I mean. You have a fixed mortgage payment, right? So every month you're paying the same amount. That doesn't change. But what does change is the ratio at which you're paying principal versus interest. Just as an example, with a 30-year loan at 3.5%, in the first month, only 35% of your payment is going towards principal, versus the last month where 99% of your payment is going towards principal. So not only are you paying your principal down with each month, but you're paying it down more aggressively with each passing month. The interest part of your payment is the cost for borrowing money, basically profit for the banks. If you look at this chart here, you can see how a conventional 30-year fixed loan is amortized. Here you see 360 lines. Each line represents one payment over the course of 30 years. And you can see most of the interest payments are front-loaded. And then as you move along the curve, you end up paying less and less toward interest and more towards principal. And that principal paydown is adding to your net worth. The fourth way that buy and hold real estate investing can help you generate wealth is through tax benefits. I don't want to go into a whole bunch of detail because I don't want this to be tax advice. I'm not a CPA. However, there's 3 main ways that you benefit tax-wise from buy and hold real estate investing. And those are deductions, depreciation, and 1031 exchange. With real estate, you get to deduct a lot of your business expenses, like repairs or new paint, and these deductions can cause the tax savings to really start to add up. Another thing you get to do is depreciation. Now, even though we just said that your property is going to appreciate over time, for tax purposes, you get to claim that it's depreciating over time. Investors typically use a depreciation method called the Modified Accelerated Cost Recovery System. This is a system that allows investors to depreciate their property over a span of 27.5 years. And with all these deductions, you could actually be profit positive, yet show a loss on paper. That's a good thing, by the way. It means you're gonna pay less taxes on your profits. And the next thing is a 1031 exchange. Suppose after owning a property for 10 years, it has gone up in value. Well, normally when you earn some kind of gain, you have to pay taxes on those gains. But with real estate, you get to do something called a 1031 exchange. Basically how this works is you can sell your property, collect the proceeds from that sale, including all the gains and profit, and then immediately go out and buy another real estate. Just kind of roll your money into that next real estate investment property, thereby deferring the taxes for a later time. Hey government, I'll catch you later. There is also a temporary tax benefit that's set to expire in 2025, unless of course it's extended, which is essentially pass-through deductions for passive income. Investors can deduct up to 20% of their net passive rental income. The next 2 ways that buy and hold real estate investing can grow your wealth are ways that nobody's talking about, but they're so powerful and I don't think they should be ignored. Number 5 is inflation. That's right, inflation. If you don't know what inflation is, I made a video about that. You should definitely check it out, of course, after watching this video. But this is huge right now. The Federal Reserve just announced a change in policy toward how they're gonna target inflation. You see, traditionally the Federal Reserve would target a 2% inflation rate. But now they're doing something called average inflation rate targeting. Essentially how this works is if in one period the inflation rate was less than 2%, then the Federal Reserve is going to have no problem overshooting that 2% target in the following period, as long as things average out to 2% overall. Given the current circumstances, and especially considering that inflation rate has been well below the 2% target, we could see some very high inflation rates in the near future. There's an argument out there that goes, well, inflation rates don't really benefit you because the prices rise and the value of the dollar drops, therefore you're actually no better off than you were. So for example, if the average home costs $100,000 and then inflation kicks in and the average home becomes $200,000, the argument would say that you're no better off because if you wanted to buy another home, you'd have to go out and now spend $200,000 to buy an equivalent home. Another way to put this is that you didn't really gain any additional purchasing power. Basically, the value of the dollar went down, and that's all that happened. However, with buy and hold real estate investing, there are a number of benefits that you get with inflation. The first one is your loan becomes easier to pay back. You probably have a fixed payment on your loan, and with inflation, the value of the dollar decreases. And since the actual number of dollars you owe each month doesn't change, but the value of the dollar has gone down, this means the overall burden of that monthly payment has been diminished. It's easier for you to make your monthly payment. People who carry debt with inflation win. Another way that inflation benefits real estate investors is because rents tend to rise. And remember, you have a fixed mortgage payment. And if the amount of rent you can charge for a property goes up, but that money you owe the bank stays fixed, your profit margin is growing. And a third way is that the value of your home is going to go up, at least the nominal value, maybe not the real value. And if the nominal value of your home goes up, the percentage of equity you have in that home also goes up. This is because the amount you owe doesn't change, but the value of the property has gone up. And this can benefit you in a whole bunch of ways. If you're paying PMI on your mortgage and it's not an FHA loan, and you have more than 20% equity in the home, essentially you can call the bank and say, hey, yeah, that PMI payment, yeah, no thanks. I don't want to pay that anymore. I realize this could be a touchy subject because inflation isn't always great in the grand scheme of things. But for a real estate investor, there is a lot of benefit to some inflation. And the sixth way that buy and hold real estate investing can grow wealth is through leverage. Suppose you had $20,000 that you wanted to go out and invest. So you went out into the stock market and you bought your favorite stock. Now let's suppose the value of that stock went up 5%. You would have earned $1,000. So your $20,000 made you $1,000 with a 5% gain. But with real estate, you can use leverage. So now let's say you take that same $20,000 and it's a 20% down payment on a $100,000 real estate investment. So now you're controlling a $100,000 asset, even though you only put $20,000 worth of skin into the game. Now let's say the same thing happens. This $100,000 property goes up 5% in value. Now you just made $5,000 instead of just $1,000. Same $20,000 invested, but you made 5 times the profit. This is because even though you only put 20% down, you get to keep 100% of the appreciation. That is the power of leverage. I get it. Leverage can not only amplify your gains, but could also amplify your losses. But I'm not too worried about this for 2 reasons. 1, I'm not looking to sell. And 2, as we showed earlier, real estate tends to go up in value in the long run. Therefore, ultimately, leverage should work out to benefit a real estate investor in the long run. So there you have it, 6 ways that real estate grows your wealth. Now think about this. So you like gold because it appreciates? Real estate can do that. You like to buy shares of AT&T because it pays dividends? Real estate pays cash flow. You like investing in the stock market because you can pay lower taxes with long-term capital gains? Real estate gives you tax breaks. With 6 ways to grow your wealth, basically, real estate makes you wealthy. It's hands down the best way for peons like us who are stuck in the 9-to-5 rat race to break free and find financial freedom. That's why I think no matter what the future holds in these crazy times, now is a perfect time to start putting your money into real estate investing. Alright folks, if you liked this video, you found it valuable, please give me a thumbs up. Also consider subscribing to the channel, it would mean the world to me. And until next time, you guys are awesome.